Hello again, it's Dr. SAP, and I'm glad to see you back for the next step in our training. In the previous chapter, we explored the importance of master data for GL accounts, such as bank and salary accounts, and how they support effective financial management. Now we'll build on this foundation by diving into the process of manual postings and understanding how these entries flow through the system. This chapter highlights how financial entries impact the general ledger in financial accounting and seamlessly integrate with controlling. You'll see how this connection ensures accurate cost tracking and provides the insights needed for comprehensive financial analysis. Along the way, we'll also discuss how to view the financial documents you create and analyze their role in the trial balance, giving you a complete picture of their effect on the organization's financial position. By the time we finish, you'll understand how to perform manual postings, identify key fields in the process, and see how these entries link to management accounting for better cost assignment and reporting. We'll also explore the tools available in SAP S/4HANA to trace and evaluate these postings in a way that supports clear decision-making. Let's move forward and connect the dots between master data, financial entries, and reporting, setting the stage for a deeper understanding of SAP's integrated financial processes. In our previous step, we explored the Manage GL Account Master Data tile, where we focused on two key types of accounts: balance sheet accounts, which reflect the company's assets, liabilities, and equity, and profit and loss accounts, used to track income and expenses. Now, as we return to the main menu, we can see an overview of the tools available for financial accounting tasks. From here, we will proceed to post a manual journal entry to demonstrate its impact on both a balance sheet account, such as a bank account, and a profit and loss account, such as a salary account. Next, we move on by selecting the Post General Journal Entries tile. For this exercise, we will record a journal entry involving the salary account, profit and loss, and the bank account balance sheet. This step will help us understand how manual postings interact with the general ledger and how they are reflected in financial statements. Let us proceed and observe the results of this transaction. This is the Journal Entry app, a central tool for manually recording financial transactions. While most postings in SAP are automated, this app is crucial for special cases like adjustments, corrections, or test entries. Think of it as a controlled way to add custom transactions to your system. Let's explore how it works and when it's useful. Here's the main screen of the Journal Entry app. At the top, we have the document header where we define the high-level details like dates and transaction types. Below, we enter the line items, specifying accounts, amounts, and additional information like cost centers or profit centers. Understanding these fields is the key to mastering journal entries, so let's break them down step by step. Two important dates drive this process. Document date. This reflects when the transaction occurred. Posting date. This determines the financial period for the transaction. For example, imagine you receive an invoice dated November 30th, document date, but you want to record it in December, posting date, to align with your financial closing. Both dates play distinct roles, and understanding this distinction ensures accurate reporting. Now, let's input the document date and posting date. Once entered, the system will validate them to ensure they align with open financial periods. This step ensures consistency across your financial records. With the dates set, we move to the first line of the journal entry. Here, we will add the bank account to record the source of the transaction. After entering the bank account, the system automatically recognizes it, streamlining the input process and reducing potential errors. Here, we specify the credit amount for the bank account. For example, we're recording an outgoing payment of €200. This entry reduces the balance in the bank account, reflecting the transaction accurately. Think of this as simulating a payment, where the amount is withdrawn from the account. Next, we move to line 2 to input the salary account, which is an income statement, P&L account. This type of account captures costs or expenses incurred by the organization. The system recognizes the account automatically, simplifying the process. Just like the bank account, the system identifies the salary account, displaying its details for confirmation. This step ensures that the right expense account is being used for the posting. Here, we enter the debit amount for the salary account, Balancing the credit entry. This reflects the cost incurred for employee salaries. Unexpectedly, an error is flagged on line 2, indicated by a triangle icon. Let's investigate the issue further. Clicking on the error icon, we access the system message that explains the issue. The error indicates that the salary account requires a cost object for allocation. This is a standard requirement to ensure accurate cost tracking in SAP. When opening the error message, we see that the system is requesting the assignment of a controlling CO object for profit and loss accounts. This requirement exists because profit and loss accounts need detailed attribution to identify and control the source of costs or revenues more effectively. For instance, we can associate cost centers, internal orders, or production orders, depending on the type of expense or revenue being recorded. This approach ensures detailed tracking and accurate allocation within the organization. Now, let's close the error message to proceed. This is a simple navigation step where we dismiss the alert and prepare the system for the next action. Let's click the close icon and move forward with resolving the issue. Here, we scroll down using the navigation bar to access the account assignment fields, preparing the entry for the next inputs. This screen displays the available fields for assigning additional account attributes. We can navigate through these fields to verify that all necessary inputs are ready for data entry. Now, we start assigning the cost center to this transaction. In this example, we select CC001, which represents the manufacturing cost center. This cost center is specifically designed to gather all costs related to production activities, helping us track and allocate expenses accurately. After entering the cost center, the system automatically validates it as a valid master data element. This ensures that the cost center is recognized correctly and aligns with the organization's predefined structure, reducing input errors and confirming accurate allocation of costs to the designated department or activity. Now, we observe that the system has derived additional attributes based on the cost center we entered. These include the profit center, segment, and functional area, which provide a deeper layer of organizational context. Cost center represents the department or activity where the costs are incurred. Profit center indicates the business unit or division responsible for profitability. A profit center can aggregate costs and revenues from multiple cost centers. Segment reflects the area of business operations, often linked to external reporting requirements, such as IFRS. Segments help group profit centers under broader categories, such as geographical regions or lines of business. Functional area reflects the purpose of the cost, such as production, sales, or administration. This attribute is particularly relevant for generating cost of sales reports. Understanding these attributes is essential for accurate financial and operational reporting, ensuring compliance with both internal management and external regulatory requirements. After confirming that all account assignments are accurate, we close the line item details to return to the main screen, ensuring the data is complete and ready for the next step. Here, we validate the journal entry details, confirming that the total debit matches the total credit. With everything in place, the entry is ready for the next action. In this step, we are navigating through the simulation process together. This functionality is critical as it allows us to preview the impact of the transaction on the financial accounts without actually posting it. Simulations are particularly useful for validating entries and ensuring there are no errors before finalizing the posting. Let's take a closer look to understand how this step enhances accuracy and minimizes potential issues. The simulation results are displayed, showing the breakdown of the accounting impact. We can see how the debit and credit entries will affect the respective accounts. If everything looks correct, we can proceed to post the transaction. By clicking Post, the system finalizes the journal entry and generates a unique document number. This document number is essential for tracking and referencing the transaction in future audits or inquiries. The journal entry has been successfully posted, and the system now displays the generated document number in the upper left corner of the screen. This confirms that the transaction has been completed and properly recorded in the system. By generating this unique document number, The system ensures traceability and provides a clear audit trail for future reference. To gain a clearer understanding of this transaction, we select the T account view. Named after the T-shape used in accounting to represent debits and credits, this visualization traces back to the foundational principles of double-entry bookkeeping. This view provides a clear breakdown of how debits and credits are distributed across the affected accounts, making it easier to analyze the financial impact of the journal entry while staying true to the core principles of accounting. In the T account view, we see a structured layout of the journal entry's impact. Debits and credits are clearly organized into balance sheet accounts, such as cash and profit and loss accounts, like payroll expenses. This visual representation simplifies the understanding of financial movements and provides an intuitive way to analyze accounting data. SAP's structured approach in this view helps users trace and validate the transaction's effect on the company's financial position, offering valuable insights for reporting and decision-making. We are back on the main SAP financial accounting page. This screen acts as the starting point for navigating through various key functionalities, such as journal entries, master data, trial balances, and financial reports. From here, we will focus on the trial balance application to analyze financial transactions effectively. Highlighted here is the trial balance application. This tool is essential for consolidating and reviewing all ledger accounts in a structured way, showing debit and credit balances for analysis and verification. Let's select this application and explore its functionalities. The trial balance application provides a detailed view of all ledger accounts. On the left, we have the navigation panel, which allows us to define specific filters and dimensions for the analysis. Our objective here is to locate and analyze a specific transaction within a profit center, narrowing down the data for better insights. To make our analysis more focused, we will apply a filter for a specific profit center. This approach isolates the financial data for a particular unit of the business, allowing us to create a profit and loss balance unique to that unit. This step enhances clarity and avoids mixing data from other transactions. In this step, we navigate to the Adapt Filter section. Filters are crucial for refining the data we analyze, enabling us to focus only on the transactions relevant to our current business case. We are now searching for the Profit Center filter within the filter options. This filter will allow us to define a specific profit center for our analysis. By focusing on this dimension, we ensure a precise and streamlined report. Once the Profit Center filter is selected, we confirm the settings by clicking OK. This action updates the filter criteria and prepares the system to display data specific to the chosen profit center. With the Profit Center filter activated, the system now displays this new field at the top right corner of the screen. This allows us to input the desired profit center code for further data refinement. Here, we enter the profit center code, PCA001, into the field. This isolates all transactions tied to this specific profit center, ensuring the data displayed corresponds to this business unit. After entering the profit center code, we confirm the selection. This prompts the system to filter and display the corresponding transactions in the trial balance. The filtered trial balance now shows data specific to the selected profit center. This includes details like the starting balance, debit entries, credit entries, and the closing balance for each general ledger account. Here, the system displays a detailed view of the trial balance with all previous transactions included. The Data Analysis tab summarizes the account balances, segregating the debit and credit amounts for each GL account. This table serves as a foundation for reviewing financial data and validating transactions. As we move forward, let's refine our analysis. To streamline the trial balance, unnecessary columns, such as starting balances, will be excluded. This approach focuses attention on relevant metrics, simplifying the report. Once redundant columns are removed, the table becomes more concise, displaying only the most critical figures. The ending balance column now stands out as the primary focus for evaluating account performance. With the final adjustments complete, the trial balance now reveals the ending balance for each account, reflecting the transactions performed earlier. This customized view showcases the effect of the bank and salary accounts on the company's financial position. Let's summarize the importance of this exercise. The trial balance not only validates individual transactions, but also offers a consolidated view of the financial health of an organization. By isolating specific dimensions, like profit centers, users can prepare tailored reports for targeted analysis. After refining the report by removing unnecessary columns such as starting balance, debit, and credit, the focus is now on the ending balance, which consolidates the final figures for each account. This adjustment aligns with the previous exercises, where filters were applied to isolate transactions related to a specific profit center. Here, the filtered data clearly demonstrate the financial impact of the postings on the final balance, providing a more targeted and concise analysis. The Trial Balance app integrates seamlessly with the Universal Journal, a transformative feature introduced in SAP S/4HANA. This innovation consolidates data from financial accounting, FI, and controlling CO into a single unified model. By leveraging this integration, users gain unparalleled access to a comprehensive dataset, eliminating redundancy and enabling cross-functional insights. The flexibility to add or remove fields, such as cost center or business area, enhances the app's usability, ensuring that reports can be tailored to specific analytical needs and organizational goals. In this step, we demonstrate the addition of dimensions such as cost center, further showcasing the power of the Universal Journal's unified data structure. This functionality bridges the gap between financial and managerial reporting, allowing users to customize layouts to meet specific reporting requirements. By integrating controlling CO elements directly into financial reports, SAP S/4HANA provides a seamless, efficient approach to organizational analysis. The enhanced trial balance report provides dual perspectives. Horizontally, it reflects a classic financial accounting FI view, detailing account balances. Vertically, with the inclusion of the cost center column, it transitions into a managerial report, offering insights into departmental costs and allocations. This duality underscores the Universal Journal's strength, integrating FI and CO data in a unified structure for diverse analytical purposes. Whether assessing overall financial health or drilling down into specific departmental expenses, this report equips users with the tools needed for strategic decision-making. In this step, we utilize the Expand function by clicking the button in the top right corner of the panel. This feature allows us to maximize the view, offering a more comfortable and focused experience when analyzing the report. By expanding the report area, we can concentrate on the data without distractions from the navigation panel or additional elements on the screen. With the Dimensions panel temporarily hidden, the expanded view provides a cleaner and more accessible format for examining the details of the trial balance report. This adjustment ensures that users can focus on the report's critical insights without unnecessary clutter, enhancing the overall user experience. After reviewing the data in the expanded view, we return to the default layout where the Dimensions panel on the left is visible again. This flexibility between expanded and standard views highlights the app's adaptability, catering to both detailed exploration and broader contextual analysis. Let's explore how to save this report layout for future use. On the top right corner, you'll find the Share button. By clicking it, we activate the Save as Tile functionality. This feature allows us to preserve the current layout of our report, making it easily accessible for quick reference later. It's a great way to streamline your workflow and keep important reports at your fingertips. Now we are presented with the Save as Tile screen, where we can define key details. Here, we'll add a title, subtitle, and description for our tile. For this example, we've chosen Trial Balance as the title and with CO Objects as the subtitle, highlighting the inclusion of controlling CO data in the report. Adding these details ensures that the saved tile is easily identifiable in the future. Once the details are filled in, we simply click on Save to complete the process. By doing so, the tile is saved to the SAP Fiori homepage, ensuring that the tailored report layout is just a click away whenever needed. Great! Our tile has been successfully saved, confirming that the layout and customizations are ready for future use. Now, let's return to the main menu. To do so, Simply select the SAP Fiori icon located in the top left corner of the screen. This will navigate us back to the homepage where all our saved tiles are organized. Here we are back at the SAP Fiori homepage. The saved tile is now visible in the main menu. This ensures that we can quickly access the specific report layout in the future without needing to reapply filters or customizations. Our objective now is to generate a balance sheet. As the financial accounting applications are not immediately visible, we will navigate through the menu. By clicking the drop-down arrow in the top right corner, we can access additional groups within the SAP Fiori interface. Here, we locate the Financial Accounting General Ledger group. Selecting this group will lead us to the main applications used for managing financial processes and preparing reports. This navigation ensures we can access the tools required to proceed with generating the desired financial statements. In this step, we enter the General Ledger section, the core component of financial accounting. The General Ledger plays a critical role in handling the chart of accounts, enabling journal entries, and facilitating the preparation of key reports such as the trial balance and balance sheet. This interface provides access to 4 main applications, each addressing specific financial tasks essential for accurate accounting and reporting. Let's proceed by selecting the Balance Sheet Income Statement application. This tool provides a comprehensive overview of a company's financial position, consolidating data from the balance sheet and income statement for precise analysis. By opening this application, we aim to generate tailored financial reports to support informed decision-making. Now, we've arrived at the Balance Sheet Income Statement screen. At the top, we can see fields such as company code, ledger, statement type, and currency, which help define the scope of the report. Below, the main workspace is ready to display data based on the criteria we'll configure, ensuring clarity and relevance for our financial analysis. Our goal now is to refine the report by isolating transactions relevant to specific business units, represented by the Profit Center. To achieve this, we'll start by selecting the Adapt Filters option, located at the top right of the screen. This will allow us to customize the report according to our analytical requirements. Here, we are presented with a list of available filters. We'll scroll through the options to locate the Profit Center field and select it by checking the corresponding box. This step ensures the report is tailored to display data segmented by business unit, aligning with our specific analysis needs. Once selected, we confirm our choice by clicking OK to apply the changes. With the filters successfully applied, the Profit Center field is now integrated into our report. This allows us to narrow down the results, focusing specifically on the business unit we are analyzing. Such customization enhances the report's precision, ensuring actionable insights. The Profit Center is now visible as a selectable field within the report. At this stage, we begin entering the desired Profit Center code, allowing the system to recognize and validate the input. This step ensures the accuracy and reliability of the data displayed in the final report. Once the Profit Center code is partially entered, the system automatically recognizes and populates the corresponding details, confirming the validity of the input. This enhances accuracy and minimizes errors during the selection process. To proceed, we confirm our Profit Center selection by pressing Enter or clicking the Go button. This action ensures that the Profit Center filter is applied, allowing the report to narrow down the results to the specified business unit. The report is now displayed, structured into 3 main sections. Assets, representing the company's owned resources. Liabilities, highlighting the obligations the company needs to settle. Profit and loss statement, summarizing the company's financial performance for the selected period. These sections collectively provide a clear and comprehensive view of the company's financial standing, making this one of the most critical tools in financial accounting. To better understand the balance structure, let's start by expanding the main categories. Here, we can see the Assets and Liabilities sections. By navigating through these categories, we aim to locate the account where our postings were made. This is a crucial step to understand how the financial data is grouped and displayed within the balance sheet. Continuing with our exploration,
we've expanded the Assets section to reveal subcategories such as Current Assets. This hierarchical view helps us drill down into specific accounts, allowing us to trace the financial data more effectively. In this step, we delve deeper into the structure by opening Current Assets and further expanding into checks, cash on hand, and deposits. This action demonstrates how the system organizes accounts into logical groups for better reporting and analysis. At this stage, we have located the specific account where the transaction has been posted. This account reflects the bank balance with a negative value, which indicates a credit line utilization. This situation arises when payments, such as salaries, exceed the available funds. From an accounting perspective, this negative balance signifies a payable rather than an asset, aligning with financial reporting standards. This insight prepares us to delve into the profit and loss statement, exploring the structure of operational costs and revenues. Here, we begin exploring the profit and loss statement by opening the relevant sections. This step enables us to understand how financial data is grouped into categories and subcategories for clearer reporting. The hierarchical structure is tailored to meet regulatory or company-specific requirements, ensuring adaptability for different business needs. As we continue expanding the categories, we observe the grouping of accounts into operational expenses and revenue streams. This segmentation facilitates detailed financial analysis, allowing businesses to monitor specific cost areas effectively. Each category is further divided into subcategories, providing insights into operational and financial elements. This detailed breakdown clarifies the financial structure, aiding in the identification of trends and decision-making for financial management. The expanded profit and loss statement provides a comprehensive view of the company's financial performance. In this case, the debit entry in the salary account represents an operational expense. While our focus is on the financial accounting perspective, this data can also be utilized by management accounting tools to assign costs to departments or cost centers for deeper analysis. To continue our workflow, let's save this financial report as a tile for easier future access. Saving tiles enables quick navigation to frequently used reports, enhancing efficiency in financial data management. In this step, we click the Save as Tile option located at the top right corner. This action initiates the process of creating a customized shortcut for our financial statement report. The Save as Tile dialog box appears. Here we can input relevant details such as the title, subtitle, and description of the tile. These fields help in identifying and categorizing tiles for improved usability. Begin by filling in the title field with Financial Statement. For the subtitle, we specify the company code 1010, to indicate the report scope. Optionally, a description can be added to provide additional context. In the description field, we enter Profit Center 001 to further specify the scope of this financial report. The group field can be adjusted as needed to organize the tile under a relevant category. Once all fields are filled out, click the Save button to confirm and finalize the tile creation. This action stores the tile and integrates it into the system for quick access. After saving, the system redirects us to the previous screen. Here we verify that the report data remains intact and can now be accessed using the newly created tile. To ensure the tile creation was successful, navigate back to the main menu. This step validates whether the tile has been added to the designated section. Now we can see that the tile has been successfully created, reflecting the actions we performed earlier. This confirms that the process was completed as expected, providing a shortcut to access our financial report.
Great work completing this chapter. In this lesson, we explored how to perform a manual posting in financial accounting (FI), while seamlessly integrating it with controlling (CO). This example demonstrated the foundational process of linking balance sheet and profit and loss accounts, emphasizing the critical role of assigning CO objects for accurate cost tracking. Through this hands-on approach, we showcased how postings flow through the system to ensure data consistency across FI and CO. Additionally, we introduced features like generating reports, such as the trial balance and balance sheet, and saving customized layouts to enhance usability and efficiency. This chapter was designed to give you a practical understanding of FICO integration with manual postings. Congratulations on this milestone. In the next lesson, we'll delve deeper into SAP's functionalities, expanding your expertise. See you there.